Hi guys, welcome back to my video. Topic today is major insurance claims spark question over damage art. A spate of recent high-profile cases demonstrate ongoing challenge for the sector. Ria Prayer. Andy Warhol to Elvis 21 times is one of 5 artwork that lawsuit claims were badly damaged during a fire at Ron Perelman Estate in Hampton, New York. Courtesy of the New York State Supreme Court filing, and Warhol Elvis 21 times is one of 5 artwork that a lawsuit claims were badly damaged during a fire at Ron Perelman Estate in the Hamptons, New York. Currently of the New York State Supreme Court filing, as total emerged of the substantial $410 million insurance claim from the American banker and collector Ron Perelman, concurrent with 5 artwork damaged in a fire. The Seoul and the Busan-based Cook J Gallery and LinkedIn Kim Gallery are facing a lawsuit from a judge due to foundation over irreparable damage to a sculpture. Both cases remain the sector that agreeing the value and the end condition of artworks within insurance dispute remains far from a clear-cut practice. According to ArtNet News, several holding companies owned by Perelman, named as AGP Holdings, are suing insurer identified as underwriters of the Lloyd's of London, arguing that the number of works caught up in the 2019 fire in the banker's East Hampton estate lost their home. These include work by Edith Ruscha, Andy Warhol, and C. Twombly Manuel. The Jaded Foundation argues that Donald Jaded until 1991 sculpture is no longer sellable due to the fingerprint left on its surface, and claimed that while the insurance company followed its payment of 80% of the sculpture estimate $130,000 fair market value as specified in the coverage. The gallery should top up the emerging amount plus legal case fees per the 2015 consignment agreement terms. When is damage truly damage? Such cases are becoming more common, says David Scully, a mediator with the Specialist Resolution firm. Art Mediation and author of the publication The Law and the Practice of Fine Art, Jewelry and Special Insurance in 2021. First, there has been an increase in the enforcement buyer, particularly in the contemporary art field, who often require their artwork to be pristine. Second, the growth of the collecting, especially of sensitive contemporary art in the tropical and subtropical area, has resulted in damage that might be made worse by environmental factors. For example, a painting might be rolled incorrectly, causing microscopic paint crack into within a pollutant and humidity Third, might enter disfiguring the painting, or simply a sweetie hand disfiguring an artwork. For Perelman, the situation is complicated further by the fact that the period of time passage before damage is identified that is despite is confirming in public shortly after the fire, or as reported by the New York Times, that the blue chip collection was largely unharmed, with only some of the works suffering minor smoke and water damage. A year and a half later, he noticed that some had lost their luster. The insurers are thought to have paid over $1,040 million in the initial claims, excluding the art now in question. Conservators and appraisal services have long assisted the market in providing neutral opinion within such dispute. Yet, the need to obtain the right specialist can prove an increasingly challenging task, given the expanding range of artwork in the industry. Digital art, or notably art existing purely online, for example, remains somewhat of an enigma for the industry sector, which relies on a period of trading within the market to establish value. Nevertheless, digital platform and technology can also be beneficial in process, says Caroline Tyler, founder of Appraisal to Peru, which is later this month launching an application to record immutable documentation directly onto the blockchain. A slippery value system, even when it is agreed who shall be paying the value of lost can still be challenging to pin down. An October lawsuit filed by Julian and Matthew Halpower in Michigan saw the homeowners allege a breach of the contract by his code syndicate for using a June 2021 valuation of the artwork lost in the residential fire, rather than the more recent and higher 2022 valuation. The title of the work loss have not been published, although court papers suggest that their value sits at more than $20 million and less than 83 past 56 million. Scholars note that thinly traded market for some artists and the high number of private sellers can also make it difficult for insurers to quickly assess purpose to values. Ultimately, the resolution to such claims comes down to a balancing asset of interest, as Robert Reed, head of fine art and the private client at his school, says in a comment unlike to any particular case. Given that 50% of art claims involve accidental damage, which often result in partially damaged items, this is a daily challenge. Different experts will come up with different recommendations. The skill for art insurer is finding a reasonable number that is acceptable to all parties. For Parolin, the situation is complicated further by the fact that the period of time passed before damage is identified, that is, despite is confirming in public shortly after the fire, or as reported by the New York Times, that the blue chip collection was largely unharmed, with only some of the works suffering minor smoke and water damage. A year and a half later, he noticed that some had lost their luster. The insurers are thought to have paid after $1,040 million.